As you can imagine, the elephant in the room is Adani Hindenburg. Now, I don't know why all of you expect that we will say anything about it. Because in the first place, our standard answer is we never comment on entity-specific matters. On top of that, the matter is before the Supreme Court. We never comment on sub judice matters. So there is absolutely no question of our commenting on that. So we will discuss all issues which are related to the significant number of policy matters that the board approved today. But I can see Lata saying, oh, mujhe aana hi nahi chahiye tha. Menika is also thinking, are, galti kiya. Yeah, you're here, that's right. Oh, all right. Oh, wow. This is very good. What? Yes. This is our, yes, this is on record. You thought we started the conference? No, hum to chai pani pi rahe the. Normally the conference starts when the press release comes, then all of you have a little bit of time to do your sending of pics and quick WhatsApping. My God, the speed is amazing. Sometimes I wish I could WhatsApp that quickly. So we are just doing chai pani, but no, but this is, well, yes, in a way, yes, that this, we are not going to be able to comment on this matter at all because A, it's a specific entity related, and B, it is sub judice. The matter is before Supreme Court. It would be very inappropriate for us to say anything about it at all.
Can we ask you about the extent to which the investigation has progressed?
Nothing.
In the sense.
Yeah.
So let me finish that. I mean, you are doing in concert with other agencies. Have you sought the help of, say, ED or TRI? Have you got the help?
So Lata, see, that is exactly what, if you see the Supreme Court order, it instructs us to give precisely this update to the committee. So it would be inappropriate for us to share with the media and the public at large what we have been instructed by the highest court of the land to go and report to the committee. So that's exactly what we've been advised to do, right? So we won't be able to do that, unfortunately. What is that? Remind me. Acha. So on that I have something to say, which is that, you know, I've been asked this question quite frequently over the last couple of months, saying now that you've finished 1 year in SEBI, what is it you want to do going forward? And obviously, you know, when you want to deliver something in year 2, you have to start the work in year 1, right? Otherwise, it doesn't get delivered in year 2. So one of the areas that SEBI has in any case been looking into and speaking to a bunch of people is the whole issue of spirit of the law versus letter of the law. Okay, so when we engage with other people on spirit of the law versus letter of the law, we can hardly violate that ourselves by speaking about this issue in a convoluted way or in a golmol way or in a jalebi angrezi way. It would violate the spirit of what we are supposed to do and not supposed to do. So we have to stay with that. And in fact, that is our urging to many people, and we've been engaged with many people who we consider third-party fiduciaries in the ecosystem, right? So whether they are law firms, whether they are accounting and auditing firms, whether they are investment bankers, we consider all of them to be third-party fiduciaries, and the market relies on what they say. And therefore, we've been actually very actively engaged that in the coming year, we want to take forward this concept of spirit of the law versus letter of the law. And we've been seeking feedback on what we as a regulator need to do about it. So, for instance, a very valid feedback that has come to us is that why should the regulator be surprised when this happens? Because the regulator's actions are also reinforcing the same. So if somebody has violated the letter of the law but not the spirit, we will take action. But if they violated the spirit of the law but not the letter of the law, we find ourselves unable to take action, or even where we take action, it is overturned. So therefore, the system is all part and parcel of this phenomenon, and therefore, we as a regulator have an equal role to play compared to the ecosystem, the third-party fiduciaries, in solving for this problem. So we certainly intend to take it up in the coming years. So we will ourselves not violate any spirit of the law. You can interpret the. We never display investigation reports. We never display investigation reports. We only display orders. We will follow the advice of the Supreme Court. Whatever the Supreme Court has said, we are duty bound to follow. That's right. We will respect the orders of the Supreme Court.
So that status report will not be shared first with the government, or will it be shared first with the Finance Ministry?
Why?
I'm simply asking.
Is that what the Supreme Court order said?
No, it doesn't.
So we will follow the letter and spirit of the Supreme Court order.
And that report will not be shared publicly unless the Supreme Court decides to release.
That's not part of there's no public sharing as per the Supreme Court.
Even before Supreme Court had asked, the investigation was already on by SEBI.
That again is going into the realm of status of the investigation. And now that we have the press release in hand, so I would request, of course, I know that you will want to send that off, so we're quite happy to be silent for a few minutes while you send off whatever you need to send immediately, and then we can start again.
Hi, can some press releases be distributed this side also?
Oh, sorry? Can I say later? Please. Sorry about that.
Madam, can we take a policy question? I mean, can you take a policy question?
First of all, this time we created an index for you because we realized that we have so many substantive matters, so it's useful. So the reason we first focused on the ESG related matters, as you know, this is an area which is very significant in the global markets. India's ability to attract capital is going to depend quite a lot on this issue. It is a very, I would say, nascent area where many jurisdictions are actually still at somewhat early stages of determining the path that they want to take. We've had numerous discussions on this in ISCO, and I must share with you that in our ISCO meetings, many of our peers who are there, the regulators, the capital market regulators, they have been quite amazed at the progress that India is making in this space. And when they asked us what the secret sauce was, we actually said the secret sauce was not so secret because every single piece of what we have done has been co-created with the market. So whether it is the ESG proposals that you will see today, which I will take you through, or it was T+1 implementation, you know that we are the first major market in the world to implement T+1, or whether it is swing pricing, which we are one of the few jurisdictions that has a very robust framework for swing pricing. All of this has been co-created with the industry through a very rigorous process of consultation and co-creation. I think we go well beyond consultation to a process of co-creation. So right at the start, if we look at ESG disclosures, I think one of the very important things that we are doing today is introducing the concept of BRSR Core, which really means it's like a core ESG. And if you look at the numbers, the normal BRSR reporting that we had outlined, which was in line with the global norms, has about 800 parameters. Naturally, many corporates expressed difficulty in being able to do that in a rigorous way, first of all to disclose, and then more importantly to have assurance on 800 parameters was a very, very difficult task. So what we did was we sat down with the industry and co-created something called BRSR Core, which has a sum total of only 41 or 46, 40? 49 parameters. And above that, there are few, but those are all derived numbers, like the intensity ratios. So it's been brought down to under 50. Not only that, in terms of what is the manner in which assurance will be given on each of these parameters has also been articulated. Guidance has been given on that. And that guidance was approved by the working group only after it was back tested. So there was a proposal that these will be the parameters, this is how we will give assurance. We went out and back tested it with a set of 10 large conglomerates. Only when it was clear, and there were some changes because of that, right? Because when the feedback comes in, when you actually implement on the ground. So with that, we now have this very powerful tool called BRSR Core. And this is what will take us into the realm of assured ESG disclosure and therefore assured ESG ratings far ahead of any other jurisdiction on the planet. So this is a very important move for us. The other collateral benefit of the core BRSR was most jurisdictions are again struggling with the issue of supply chain ESG. So upstream, downstream, suppliers and dealers and so on. Everybody knows and understands that there's a vulnerability there to greenwashing because if an entity is wanting to develop a good ESG score, it can simply outsource either upstream or downstream the aspects of its activities which are not giving it a good ESG score. So it's very easy to circumvent this and it can result in potential greenwashing. So therefore we are saying we must bring in the supply chain, but because the supply chain will naturally consist of smaller companies. We must bring it in only for BRSR core, only these under 50 parameters. And more importantly, we don't want 100% coverage. So your top suppliers until you reach cumulatively 75%, your top customers until you reach a cumulative 75%. So it's much easier to comply. So there's a huge ease of doing business here, but at the same time you are achieving a high level of assurance. So this again we think is a very significant move that we are making, and we think that a large number of people are looking forward to seeing how this will work. Also, just to highlight that in the core BRSR, we have incorporated certain aspects of ESG that are extremely relevant to emerging markets. So traditionally, since this space has come from the developed markets, many of the emerging market relevant parameters were never included. We have now included them. And again, we find that when we speak at international fora, many of the emerging markets are looking forward to seeing what is it that we are doing in this area. Then moving on to the issue of the ratings themselves, we believe that this needs to be a regulated area. As you know, globally before the 2008 crisis, credit rating agencies were also not regulated, and many people had said to us that, you know, global best practice does not require credit rating agencies to be regulated. After 2008, they all changed their mind. So we believe in not allowing a problem to first blow up and then only address it. We think that it's important that there should be, right from the start, a regulation and a way in which these entities conduct themselves. It is again very much a disclosure-based and a code of conduct-based approach, but yes, they need to be regulated entities. In terms of ESG investing, again, we are all very conscious of the fact that more and more money is flowing into these funds. Risk of greenwashing must be minimized. And therefore, we are introducing two things. One is, again, facilitating the growth of this market. The mutual funds, as you know, have restrictions on how many schemes they can launch. So up till now, there was only one possibility of launching one ESG scheme. We've now created ESG as a category. So within that category, there are now almost half a dozen different approaches to ESG. So in short, you can have more variety of ESG schemes going forward. So this is a developmental effort which is going to happen. But at the same time, there is greater emphasis on disclosures so that there is the investor, when they are investing in an ESG scheme, they know exactly what they're putting their money into. The second part is a linked proposal, which, as I said, is the framework around which we are saying that the ESG rating providers must be governed. So there must be transparency in terms of their rating rationale. Conflict of interest, very important, because as we know, the audit firms in the past have come under tremendous scrutiny on account of conflict of interest, that on the one hand they have assurance type activities and on the other hand they have consulting type activities, and the two are not really separated in a meaningful way. So right at the start we are wanting to make sure that that doesn't happen. So these rating providers can provide ratings and assurance type services, but they cannot then go and have a conflict of interest in terms of consulting. The third is also very important, particularly again from the perspective of India and emerging markets. You can have a ESG rating which is a static rating which is based on today's situation, but in order to facilitate the flow of transition finance, and particularly economies like ourselves need that transition finance to take the entire industrial sector from point A to point B. And therefore, the way in which we have structured what the rating agencies will do will also facilitate the creation of a rating which will facilitate that funds can flow into an entity for the specific purpose of facilitating transition. Lastly, of course, as I said, because we are now bringing in BRSR Core, we will perhaps be the first country in the world to have ESG ratings which are based on assured data. With that, we'll move on to the secondary market. So we had said many months ago that we will come with an ASBA-like facility for secondary market trades. It's now going to become a manifest reality. Of course, system changes are needed, so the implementation date is a little bit away, but practically all the modalities have been ironed out. This has been once again co-created with the brokers and with the clearing corporations and the exchanges. So at this stage, we envisage that it will be optional both for the brokers to offer to their investors as well as to the investors as to whether they want to avail or not avail of this facility. But we hope that like ASBA did, and it picked up popularity so much, we hope that once the system stabilizes and people start to see the benefits, and some of the top brokers, because we know there's a fair amount of concentration, right? The top 10 brokers account for, I think, almost 70% of the customers in terms of retail. So we hope that the transition will be rapid once we actually get implemented. But this, we think, is another very important milestone in the way in which trading is done in our country. Again, I must share with you, fresh out of the ISCO oven, that global jurisdictions are just amazed. You know, everywhere else in the world, the model is a B2B model. The exchanges or the clearing corps talk to the clearing members, and it stops there. We are perhaps very unique. We don't have omnibus accounts. We don't have any of that. And the entire chain is completely visible and transparent thanks to the technology. So I've started now referring to this as really the India market stack, because nowhere else in the world is there a market stack in terms of technology which allows for us to go from B to B to C. And for crores and crores of investors, you know that we had implemented the pledge-repledge system for securing and protecting the shares of the investors. We are now on this, I would say, very important point where we are now going to protect the cash of the investors. And therefore, you're going to see that our India stack in terms of markets is going to be, again, a world-beating stack, barring none. The second thing in the secondary market is a complementary proposal which relates to upstreaming of client funds. You know that typically client money goes and resides with the intermediaries, the brokers, in the form of pool accounts. We had recently implemented a regulatory provision where once in a quarter on the same day, all the money had to be returned to the clients. And you recollect that it was, we ourselves were shocked when we saw some of the numbers. And then we realized just how much money is actually sitting in the system. And again, it brings to light how in many parts of the world today, for instance, many regulators are worrying about the funds which are lying with broker dealers. Okay, it's become a topic of discussion amongst regulators in terms of systemic risk. And here we are, where we are saying that we are now going to have zero systemic risk on account of this, because all the money of the clients that comes into the broker network will get upstreamed to the clearing corporations, will get lien marked into the clearing corporations, and we will no longer carry that risk at all. So again, landmark in terms of the way in which our technology will work. While we were in the process of designing this, and as I said, co-creating it with the market, we came across another very interesting facet which we have put down for our next year's KRAs, right, Anand? Next year's KRAs, which is that we want, it's a bit like saying portability across. You know that many investors have been asking us for portability across DPs. We think there is also a requirement for portability across clearing corporations, because while we are very focused on mitigation of cybersecurity related risks, these risks are a reality in today's world. We cannot underestimate them. And therefore, the need to think about portability across clearing corporations is also important. And if we have to have portability across clearing corporations, we must have portability of the collateral. So the collateral which is lien-marked to clearing corporation A should be instantly transferable in terms of lien-marked to clearing corporation B. And that mechanism we are now going to take up, and that's, as I said, a KRA for next year, that how are we going to work that system, and that will de-risk us even more as compared to where we are today. The next one, again continuing in secondary markets, is about amendment to the stockbroker regulations to bring in a provision which casts a responsibility on the brokers to actually monitor for fraud and other market abuse. Now, the roots of this provision and this thought process actually came to us from the industry, from the brokers, where they shared with us some of the best practices that they are following already. Okay? And I would just like to, by way of illustration, highlight one case which I thought was particularly important, and how important it is that a broker does what is right. Okay? So this fairly large broker came and said to me that when they are doing KYC of a new customer, one of the first things they look for is to see the age of the investor and the date of the PAN card. So if the age of the investor is, let's say, 40, 45, something like that, and the PAN card is very recent, it's an immediate red flag to them that this is likely a mule account which is being set up for misuse, because a person who is 45 and having first-time PAN card, where is the wherewithal for him to be trading in the market? And therefore, most likely, this is a mule account. They turn down the customer. They refuse to open the account. Now, I'm saying there are different brokers. There are some brokers who talk to us about how they are using technology. Some of the larger tech-based brokers talked about how they use technology to identify. So another broker came and told us that they had this client who was just making inordinate sums of money, profit, day after day after day. And he said, statistically, this was an impossibility. We shut the guy's account. Okay? Which obviously, so I'm saying this is what brokers are doing today. They are showing great responsible behavior, but we need that to be implemented across the board, because equally the feedback that came on the other side was that while we have all these very good practices, we also have some brokers, a very small minority, but we also have brokers who are constantly colluding in the opening of mule accounts, in the facilitation of mule accounts, and in basically facilitating all the kind of pump and dump that you have been seeing recently. We passed some very interesting orders. So you are being able to see what all is going on, and we are told that, of course, very often, a small minority of the brokers are actively involved in this kind of misconduct as well. So both of these put together have led us to bringing in this regulation. So that is really the regulatory intent, to capture the best practices and also to mitigate collusion. The last item in the secondary market piece is, and well, it could have been in secondary market, it could have been in mutual funds, is a regulatory framework for index providers. So the board has today approved an in principle proposal to say that we should bring these under the regulation, and certain details are being worked out now. But again, like we said in the case of ESG rating, we believe that this needs to be done sooner than later. Let us not wait for a LIBOR kind of a scandal to break out and then say we need to regulate. Let us make sure that we have a base level of very simple, light touch, conduct-based regulation to begin with. No, no. They just happen to be subsidiaries of the stock exchanges, but there is no provision in our law to regulate them at all, not even one. Yeah, sorry. They are either subsidiaries of exchanges or of credit rating agencies. They are not regulated. We don't have a stitch in place for regulating them. We now move on to the mutual fund piece, and we are absolutely delighted to share. The Honorable Finance Minister had made an announcement in one of the budget speeches about a corporate debt market development fund, which was to function as a backstop facility for mutual funds in the event of a market dislocation in the bond market. And we're very happy to share with you that that whole initiative has made a very, very significant progress, and therefore today the board approved the creation of a new chapter in our AIF regulations to facilitate the creation of this fund. So basically what this fund will do is it will sit there on standby and just be on standby in normal times. But whenever there is a significant market dislocation which warrants sovereign intervention, so it has to be really something significant, not minor volatility, but a significant event happens, then just like you have developed markets who instantly trigger asset purchase programs, we will have the ability to, with the press of a button, we would be able to activate this fund, and it would go in there and become the buyer of last resort from the mutual funds. This is an initiative which will be initially funded and the corpus brought in by the mutual fund schemes as well as by the AMCs themselves. So very important to know that the AMCs themselves are putting skin in the game, their own money, not the scheme money, but their own money. So this is a very important milestone both for the bond market and for the debt mutual fund market. So we hope that this fund will now, so whatever regulations were required to facilitate this have been approved by the board today, and so we will very soon see this backstop facility coming to life. It will be managed by SBI AMC, and the entire structure has now been approved, and it's something that I must say that the industry worked very, very hard on, and it's finally seeing the light of day. The next one, again, in relation to mutual funds, there has been a lot of debate and discussion around what is the role of the trustees in an AMC vis-a-vis the role of the AMC itself. And I think that when we had an unfortunate series of events last time, we took a very, very serious look at this and decided that we need to clarify on this. So essentially now what this set of proposals is saying is two things. Number one, it is saying that the principal focus of the trustees is in areas where there is a potential conflict of interest between the shareholders of the AMC and the unit holders of the schemes. That's where you have to focus. So a lot of the procedural and the operational and the tick box stuff has been removed. Saying, please don't bother with it, that's not your job, that's not what we need you to do. We need you to focus on areas where you, as the fiduciary, taking responsibility for the unit holders, you are guarding against conflict of interest with the shareholders of the AMC. So that role is now very, very crystal clear. There are a lot of modalities built in, again, all co-created with industry as to how they are to go about that. In addition, is a very important point which our advisory committee advised us. I must say we went back and forth on it a couple of times, but we finally decided that what the advisory committee was telling us was in fact good advice. And that was that the AMC itself must be given a huge responsibility for unit holder interest, and not just as a custodian of the shareholders of the AMC. So now a new committee is going to be formed called the Unit Holder Protection Committee. This will be a committee of the board of the AMC. So the AMC has to own fully. They cannot now say, oh, but the trustees were supposed to look after the unit holder. I was only supposed to look after the interest of the shareholders of the AMC. They can no longer say that because they are required to have a unit holder protection committee and to ensure that they are not compromising. So they are taking responsibility as well for not compromising the interests of the unit holders. Next is an ease of doing business proposal. We had promised to the industry that after 2-3 years of a lot of regulatory tightening, I would say, the evidence of that has been very clear. If you see that, for instance, in the debt mutual funds and in the debt market, given the turn of the interest rate cycle, there has been significant redemption in the debt mutual funds. And despite that, it's been smooth. There's not been a murmur. It's been like a hot knife through butter. There is not been a ripple in the market because the entire industry has taken the whole process of risk management in open-ended funds to heart, and they've truly implemented, if I were to say spirit of the law, this is one industry in respect of liquidity risk management in debt funds. Truly spirit of the law has been followed, and therefore we have seen absolutely no problem in what otherwise would have been a huge issue, as we've seen overseas what is happening, SVB Bank, etc. So we had promised the industry that, you know, with all of that that's said and done, we need to and we will need to bring in a lot more opportunity for growth and liberalization. So here it is. Essentially, it is addressed at the core of saying we would like more innovation in the industry, more players in the industry. And there were 2 things we promised them. This is the first, which is a lot of flexibility in terms of who are sponsors, eligible sponsors for mutual funds. So not only does a whole new category of sponsor come in, which is in the name and nature of private equity as well, more importantly, we are now bringing in a concept of self-sponsored AMCs, which means that when an AMC becomes large enough that in itself it is now eligible to sponsor another mutual fund, then there is no need for it to have a sponsor, and it can declare itself to be self-sponsored, and the erstwhile sponsor can disengage and exit without having to find another suitable sponsor to come in and step into its shoes. So we had said earlier that, you know, in our market we don't like Abhimanyus. Someone who comes in must have the ability to go out, and they shouldn't get stuck. So the same is true for sponsors of mutual funds. They come in as sponsors. Once their children become mature and grown up, they can exit without having to find a new parent for this grown-up child. So this is a very significant liberalization. The second thing which we have promised to the industry, and which is again next year's KRA for us, is what we call MF Light. So if mutual fund regulations are 100 pages today, the target to the SEBI team is I want it in 10 pages. And that's going to come for passive funds, because we know that a large amount of our regulation is really around active management. So if somebody wants to come in and only do passive funds, there should be no reason why they have to comply with 90 out of those 100 pages. So only 10 pages will apply. So MF Light this year is, meaning when I say this year, in the coming year, is what we are taking on as a KRA for the industry. We then move on to empowerment of the investors. We have, based on various learnings in the recent past, consolidated a set of provisions. A lot of them relate to disclosure. As you know, we are predominantly a disclosure-based regime. We believe that the real role that SEBI has to play is not to tell listed companies what to do, what not to do. That's not what we have been empowered to do by the SEBI Act. However, the principal role that we play is to ensure that there is full and comprehensive disclosure, and that then with that disclosure, the market votes with its feet, votes with its wallets. So material events, we have brought in many provisions, both for comprehensiveness of disclosure as well as timeliness of disclosure. We also have a set of provisions for empowering the shareholders in terms of their approvals. So things which were sort of considered a promoter's lifelong rights, we are now saying that it is not lifelong and that you do need to go back to your investors periodically and take approvals. So for instance, special rights granted to any shareholder, including promoters. We cannot have perpetuity of special rights. We cannot have perpetuity of board seats. There was a arbitrage. There was a regulatory arbitrage between scheme of arrangement and sump sale. We've now bridged that arbitrage. So essentially empowering the shareholder to make sure that there isn't a perpetual set of rights which the promoters have, which they can take for granted lifelong. There are some more proposals on timeliness of submission and filling up vacancies of directors, largely procedural. And then also some more feedback in terms of at the time of IPOs and bonus issues, there are some procedural issues which we are ironing out. For instance, underwriting. It's very different whether there is hard underwriting or soft underwriting. We are making the rules very clear that if you have an intent to have hard underwriting, it must be disclosed ahead of time. It cannot be done later. Also, in terms of bonus issues, we found that there have been some problems where even before the previous shares issued by the issuer were traded and listed, they came up with bonus issues. Technically, again, letter of the law, there was nothing barring them. Spirit of the law, it was completely wrong. We are now fixing it. We then move on to the debt market, another ease of doing business proposal. This is in the private placement space. We found that there are a large number of issuers who are repeat issuers. And it was completely insane the number of times that they had to file documents again and again and again. And it just didn't make any sense. And therefore, we've now come out with the concept of a general information document which you file the first time, and the validity is valid for a period of a year. And then every time that you want to do an issue, you just ride off of that and issue and give much less disclosure. Somewhat similar to the umbrella prospectus that was there for public issuances. Based on the consultation that we've done with the industry, we believe that this is something that really would address the ease of doing business. And therefore, if you read our the first para in this carefully, you may get a little bit confused because the penultimate sentence says, the same shall facilitate ease of doing business for the issuers. And then it says, comply or explain, and then mandatory. Okay, so you'll wonder that if this is ease of doing business, why does the regulator need to push anyone to do it? People should do it anyway. So our observation is that there are times when when all the parties involved in a transaction are not necessarily not conflicted, and therefore there are times when even what is right for the issuer is not necessarily done. And therefore, we want this comply or explain provision to come in so that every issuer has to look at it and say that if SEBI is saying comply or explain, why am I not looking at this route? Why am I looking at the traditional route? So this is really going to move in that direction. Also, there were some disclosure-related parity issues, which we are also bridging. So that's, again, somewhat procedural. There are two more provisions in the debt market which are extension of comply or explain. You would know that these were provisions that we had brought in some time back. We feel that given the interest rate cycle right now and given what is really, what is really the context today. So in terms of this 25% incremental borrowing, what we are saying is we're extending. It was a block of 2 years. They were required to achieve something in a block of 2 years. We are now saying that you will have 3 years in which to comply with it. And in terms of certain corporate governance norms, we've gotten feedback from the market on something that we accept is the impossibility of compliance. So there are certain provisions which these companies, it's just impossible for them to comply. So They don't want to be in non-compliance. We are not wanting them to be in non-compliance for technical reasons. So again, going with this whole spirit of what we are interested in is the spirit of the law. We are saying that we will extend this, and in the meanwhile, we will find a solution to the problem of impossibility of compliance. Item number 15 is in the AIF space. Here we have a number of proposals. The first one is very, very important. As you know, some time ago we had said that all AIFs need to submit their data for benchmarking, relative benchmarking, so that there is one objective and transparent metric that the entire industry uses to know how the industry is performing and how does each AIF perform within that industry. At that time itself, there had been discussion that while the disclosures have been standardized, the valuation norms are not standardized. But we did leave it for another day, saying we'll come back to this, so we've now come back to it. So again, in consultation with the industry, there are now going to be certain standard ways in which the valuation will be done, certain standards will be adopted. We understand that most of the AIFs in any case follow this standard informally, so it will now really not disrupt the market. They will just more formally adopt those standards, and they will do that. But it will give us another strength, I would say, in the comparison of the benchmarking data as to who's performing how. We will now have more comparable data than before. The second is in terms of dematerializing the units. We believe that, you know, we've done this in the securities, in the share bazaar, you know, long ago. We all know the benefits of that. And therefore, we feel that this industry also needs to move into that. The first step we have taken today in terms of saying the units have to be dematerialized. Again, next year's KRA, we will be looking at dematerializing the holdings. So their investee companies will need to dematerialize as well, so that both the asset side and the liability side are held in demat. The third one is actually it looks like it's tightening, but actually it's an ease of doing business. You know, we've examined the root cause of why there is often a lot of back and forth in terms of approvals for registration. And one of the reasons is an interminable debate upon the validity of the experience of the staff who are the key persons. So we figured that we need to cut this discussion and debate at the root. So we will now move into a certification mode rather than an experience mode. If you pass the certificate exams, you are eligible, and you will then get your approval much faster. Next one, 15.4, is involving conflict of interest. We already had a provision which was linked to conflict of interest, but we are now expanding it and covering more within the ambit of a conflict of interest, including that if a single investor or a unit holder holds more than 50% of the corpus of the scheme, in a sense he is also considered sort of a related party. And again, if you deal with him or his associates also, that, you know, there's a potential conflict of interest, and therefore a separate process needs to be adopted. So this is really to address conflict of interest issues. The next one is, again, very, very important. Given the vintage of many AIF schemes that were launched in the past, they are now reaching maturity. They are, in fact, past their maturity and at the stage where the maximum extension of 2 years is also been crossed. They are in their liquidation period, and time is running out fast. So the issue of saying, what do we do when we continue to hold assets which are illiquid, we cannot get rid of them? What do we do about that? We have worked with the industry, again co-created a solution. It breaks into 3 parts. One is, of course, if 75% of the people want in-specie distribution, just give it to them. If 75% of the people want that particular asset to go into a new scheme. We're calling it a liquidation scheme. It can go there, but the value at which that sale will happen, we are being very clear that that process has to be very tight so that it cannot be misused to inflate the performance of the AIF. So if really there's no value left in that asset, you cannot by a mere paper transfer attribute a 100 rupee value to it. Sorry, won't do. So there are some very strict norms in terms of actually getting bids for the people who want to exit, minimum 25%. If you're not able to get 25% bids of any value at all, then it's written down to 1 rupee. Right? So we want to facilitate that if there's still an opportunity to do something with that asset, people should have the ability to do it, but it cannot be used as a means to camouflage the poor performance of the fund qua that asset. The last one is in many ways the most important to us, which is really the strengthening of the investor grievance redressal mechanism. As most of you know, we already have a mechanism which works in the stock exchanges. Currently, it is limited to the processes involving the brokers and their clients. We intend to expand this process in two ways. Number one, to expand it to cover almost all our intermediaries and all their clients. So now there will be this one forum where you can go to and get your mediation arbitration done. The second is to expand the capability of the exchanges themselves, bring in the professional online dispute resolution professionals who are there, and bring them onto the platform and thereby expand the capacity of the whole thing, including through a hybrid mode. So no need to physically show up in Delhi. It can be done online or through a hybrid mode for those who prefer a physical way of doing it. And last, of course, our budget for next year was approved, so we can all get paid our salaries from April. That's it.
Very listening in questions. We'll come back to, please ask one question. We'll come back to everyone. There is enough time. So we'll start with Yash, CNBC.
Thank you so much, ma'am, for taking us through this very, very extensive board meeting outcome today. I need one clarification and I have another question. As far as disclosure norms are concerned, of course, there is a mention that introduction of quantitative threshold for determining materiality of events or information. The materiality will be the same as mentioned in the consultation paper, which is 2% of revenue, 2% of net profit, or an average of 5% of your, that's the same thing. Okay. Now, just very quick two questions. As far as total expense ratio is concerned, have you sort of reached out to large mutual funds? There have been instances where the expense ratio is much higher, which has come to SEBI's notice. Have you reached out to large mutual funds? And largely, do you intend to form a very strict policy where these expense ratios can be contained and monitored in that sense? And second question is with respect to a lot of orders which you've passed recently. They've sort of had a hurdle when it comes to the legal point. Either it's SAT or Supreme Court which has turned down or reversed those orders. What is going wrong? Is it something with the orders or the way they've been presented? And it's sending a very wrong message to the community. What do you intend to do about that? Thank you so much.
So on total expense ratio, I think you might recollect we actually for the first time put out a press release in this matter. The reason why we did that was because we felt it was price sensitive information. We have a number of listed AMCs and it would not be appropriate that there is selective disclosure of the fact that SEBI is evaluating the whole process of total expense ratio. It was price sensitive information. So I would only share that what are the 2 or 3 guiding principles of our review, and then in what form and manner it will manifest. You'll need to wait and see until the actual proposals are adopted. But the guiding principles broadly are the following. Number one, that when we say total expense ratio, it should be total expense ratios, no ifs, no buts. But ye upar se, but wo niche se, but wo side se, no bus. It's called total expense ratio. It should cover all expenses. Number one. The second guiding principle is that we have always maintained that there is economies of scale in fund management. So naturally, if your AUM goes from here to here, you do not double your workforce, you do not double. So there is this piece of economies of scale. And it is our belief that the economies of scale are not at a scheme level, but they are at an asset class level. So equity is one asset class, debt is one asset class. Sure, overnight funds is a different asset class, right? So it's an inflated number. We are not going to go with that. That's the feedback we got. We accept it. So the principle is you get economies of scale based on asset class, not scheme level. And the unintended consequence of scheme level was twofold. That SEBI itself, through its regulations, was giving an incentive for fragmentation of schemes, which is not good. That was a very perverse incentive. We have to remove it. Secondly, it was creating a lot of mis-selling on account of NFOs. So that had to be stopped as well. So given this, this is the guiding principle in terms of the second area. The third area, which is somewhat, I would say, contentious, but we like to call a spade, is this whole thing of saying that, brokerage should be kept outside of these expenses. And first of all, as I said, it violates the first principle because then it's not total. But equally importantly, we believe that this tantamounts to one of two things. And I say this very carefully. One is either you are double charging the unit holder, because if you are taking asset management fee to manage the asset, then why are you paying such large sums of money to the brokers for the research which you are supposed to be doing? Now, we don't mind. You want to use research of the brokers, we have no problem. I've been a sell-side investment banker myself, so the last thing I want to do is to kill that profession. But you cannot pretend otherwise. Okay, so to us, it was a double charge. We do not appreciate that. The other is that when we examined some of this, we found that there was a distinct possibility, and I say this carefully, that there was a distinct possibility that the brokerage was being paid for reasons other than professional reasons. And therefore, and why was it not coming under anyone's radar? Because the board of the AMC was not looking at it, because it was not coming out of their kitty. The minute you bring it within the total expense ratio, automatically the board of the AMC will ask the question, why are you paying Mr. XYZ broker so much money? Today, no one was asking that question because it was not pinching anyone other than the unit holder. So for both of these reasons, we have taken a call that this is a guiding principle. We will not change from this. As I said, how all of these guiding principles come together and manifest in terms of an actual formula, we will come up with a formulation, again, in consultation with the industry. We have no desire to, create any adverse impact on the industry, but the principles should be followed. The second thing in terms of the orders. So here I would say three things. Number one, I would say that every order which is adverse for SEBI is important to us because there is a learning there as to what could we have done better, what did we fail to do. Okay? So we take each one of these setbacks very, very seriously. Number one, we analyze them to depth, to analyze what went wrong, where, why, what do we need to do to fix it. However, I would like to share some statistics with you because I don't like to talk without data. Right? Our success rate in the Supreme Court is 75%. If Babita is here, she can tell me which period. Either it is for the current 11 months or the rolling 12 months or some period. She has taken the recent period. And data, 75% is our success rate in the Supreme Court. So which also tells us that obviously the media likes to talk about that 25%, rarely talks about that 75%. So maybe we would request you to do some introspection along with us to help us for the world to know that this is not a regulator whose every case in Supreme Court is getting thrown out. No, that's not the case. 3 out of 4 are being upheld, and the 4th is against us. Now, one of the allegations made against us is that why does SEBI bring so many cases to Supreme Court? Okay. Now, I would like to again give you some data. 46 out of 57, roughly 3/4? More than 3/4. 3/4 of the cases which we have taken to the Honorable Supreme Court are cases which are linked cases, which means if we have gone in appeal on one particular matter, and there are other cases in the pipeline coming from there, we cannot not go to the Supreme Court. We have to. Because you've appealed it, now you have to keep going and wait for, and when they get resolved, they'll all get resolved together. The Honorable Supreme Court will clear all of that. So 75% of our cases pending in the Honorable Supreme Court today are linked matters, all linked to one case. So when it gets cleared, it will all get cleared. So this is the data on the table. Perception may be otherwise, and I would request you to please help us correct this perception.
Sajid.
Yes.
Hi, ma'am. Couple of questions on ASBA. You said it's going to be implemented in a phased manner. The first thing, do you have a technical or technology timeline when it will be done? Second, when you say phased manner, you're going to start with cash market and then derivatives, or how is it going to go? Or in within the cash market, whether intraday trading or delivery-based trading, how is it done? And secondly, you said that the option will be given to both the investor and to the broker. If the broker doesn't want to do it, how will the investor adopt?
So you're right. Initially, when we had embarked on this journey, we thought we would do it segment-wise. But when the technology discussions happened and the settlement discussions happened, at that time the conclusion reached was all or none. So it's much easier to implement technologically to say that this client who this broker is coming for ASBA, and even the same client has an option. Through broker A, he comes through ASBA. With broker B, he comes through normal. Okay, so that's sort of the construct that's been given. So therefore, we've abandoned segment by segment rollout. We are going with all or none because it's just easier to implement technologically. The phasing is therefore not in that form. It is in the form of what gets progressively made mandatory. So as I said, right now, everybody has an option. I can go to 3 brokers, do 3 different things as an investor. A broker can say, I offer, I don't offer. Our expectation is that it's a competitive market out there. Okay, broking is not an easy business. It's a competitive market out there. We hope that many of the brokers will implement, and that's what we understand also. It's not just an idle hope. There are at least half a dozen brokers. There are at least half a dozen brokers who have been actively working with us on co-creation, and we believe that they will implement it very quickly. So how we will roll out, maybe we will say, okay, the top 10 brokers have to now mandatorily offer to their clients. We still won't make it mandatory on the client. So in this manner, the phasing will be the level of mandatoriness, let me call it, rather than segment by segment.
One more on the corporate debt fund which has been created. What will be the initial corpus for that fund? And when you are saying that the mutual funds have a skin in the game, will they be doing from their own equity or surplus, or will investors be charged the amount? Yeah.
So the initial corpus is 3,000 crores, and the government has approved a 10-time leverage, so 30,000 crores. This 30,000 crores will be guaranteed by NCGTC, which is basically the government's guaranteeing arm. So it will be a sovereign guarantee. So when the button is triggered that we are in the midst of a market dislocation and we need sovereign support, then this entity will go borrow from the banking system or the repo market or wherever against the sovereign guarantee. So it will now have 33,000 crores with which to go out and be a buyer of last resort from mutual funds. Only mutual funds will be able to participate because they are the contributors, and each of them will be eligible to participate to the extent of their contribution, but it will be at a AMC level, not at a scheme level. So if let's say a fund has contributed X amount to that 3,000 crores, let's say 10%, so they will be able to go and sell assets of, if they've contributed, whatever, 300 crores, they can go and access 3,000 crores, 10x. SEBI triggers the button. The SEBI board will trigger the button. A very elaborate model has been built, analyzed and approved by the government specifically. Of course, all models are meant to be reviewed from time to time because we expect that this is going to be a very long-term facility. So as and when there are fresh learnings, it would be reviewed. But as of today, we have an approved model. That model will form the basis, but not the only contributor to the decision. Then the board will sit and will take various other qualitative and quantitative factors into account based on that model. No, model plus other factors, and then decide whether sovereign support is required or not. Yeah, so as I said earlier, that there is, the first 3,000 crores is going to come, the first 3,000 crores is going to come from roughly from my memory, 10% is coming from the equity of the AMCs and 90% is coming from the, those specific schemes which are going to benefit from this. So not every scheme of the AMC, only the schemes who are going to benefit from this facility. The debt funds. And those also, they are specified debt funds. AMC, the equity. Roughly 10% था. नहीं, वो तो था. Out of the initial, that's my recollection. It's not here. Yeah, it's not here, but it's roughly. Paying a very small amount. I think it's a 0.01 or, huh? No, 90% of 10%, bhaiya. No, out of 3,000, no, the real full corpus will be 33,000, no. 3,000 not relevant. 3,000 is not relevant. When you actually want them to come and buy the bonds, they'll have 33,000 crores. The mutual fund investors have only contributed 2,700 out of that, out of 30,000 crores. So it's 90% of 10%. So 9% of the total is contributed by the mutual fund unit holders, 1% by the AMC from their own equity, and 90% by the sovereign.
So, 1 second.
Sorry? हाँ कितना है सर 0.01 something बता देते हैं आपको.
अच्छा, is Cornish from Financial Times?
Thanks, Madam Chairperson. Just a clarification question. Why didn't the Finance Minister address the SEBI board post the budget?
Well, the purpose of the meeting is to look at how it's meant to be an outreach program for implementation of the budget proposals. We had been working so closely with the ministry and we have already commenced work on the budget proposals. So in many ways, was there a need, was there a tearing need? There was a lot more outreach programs that the ministry had to do in many parts of the country. It didn't happen, it didn't happen.
Ankur. I'm Ankur Mishra from ET Now. Just want to draw your attention towards disclosure norms of market rumors to be verified, confirmed or denied by top 100 listed companies. Is there any timeline for the same, in a point earlier, it has been specified 12 hours timeline. Is there any timeline for this adherence as well?
Yeah.
Yeah, I think it is 24 hours.
Yeah, we'll just check and tell you. It's been stipulated.
Ma'am, another question on financial influencers. Last time when we spoke, you told us that it is a complex issue. Is there any consideration to bring a consultation paper on the same, or the work has begun?
Next year's KRA.
Mahalakshmi?
As you can see, we are accumulating KRAs left, right and center for next year.
Ma'am, and last question on the trustees' oversight on AMCs. One point is mentioned that fairness of fees and expenses to be there for trustees to see. How will that be quantified? Will it be only qualitative?
No. I think fees to ek number hota hai bhaiya, rupees, crores. Nothing can be more quantified than fees. So the question is, let me put it this way. In theory, and this is what we are trying to emphasize here, I'm glad you picked up on it. In theory, the construct of a mutual fund is, there is a trustee. He decides that all this money is here from the retail investors, other investors. Let me find a good fund manager for this money. That's what it's meant to be, right? That's not in reality what happens. That's how it's meant to be. So we are trying to now ensure that the trustees see this role of theirs and say, okay, this money was with you. Very good. I am the fiduciary for the unit holder. Now, let me see how well you performed vis-a-vis your peers, how well you performed vis-a-vis benchmark, and how much did you charge me for it. So if you are underperforming vis-a-vis benchmark, vis-a-vis peer, and you are charging me a ton of fee, the trustee is supposed to say, I don't like it, please reduce your fee or I'm going to another fund manager. That's how it should be. That's the legal construct. So we are now emphasizing to the trustees, please play this role, please evaluate whether the fees that is being paid is appropriate, not appropriate, compared to peers. Okay? You are supposed to look after the unit holder. If somebody is charging the max cap, I don't know what the cap is, 2%, something. Okay? And every other competitor is charging 1.5%, and you're underperforming those fellows, why am I entrusting you with the money? One good reason. So this is what, that's what I'm saying, the sharpness of the role now is, of course, the AMC would like to maximize fees for its shareholders. And many of them are listed, so we have full empathy for them. We don't say that's a bad thing. They are trying to do their job. But what about the unit holder here? Who's watching out for him? So this is the balance which is sought to be now made. So yes, henceforth trustees will be expected to demand to see the performance of the fund manager vis-a-vis benchmark, vis-a-vis competition, evaluating whether the fee was justified, not justified, why is so much being paid, X, Y, Z.
Mahalakshmi?
Yeah, so that 24 hours from the reporting of the report.
This is Mahalakshmi.
Again, one more clarification. As when we do stories, we definitely write to companies. Now, this is also part of that. Is it that somebody has reached out to the company, or from that timeline you have to report within 24 hours, or sometimes if there is, as you mentioned, market rumor, it is already there in the market, floating in WhatsApp groups, or it is there on some websites. Again, has that been also identified?
You have defined mainstream media. It comes in any of the mainstream media, they have to.
We've defined mainstream media. That was one of the feedback we got in the consultation process, that please don't leave it vague because there's a whole digital world out there. Some random person somewhere is publishing something. So we took that feedback as constructive feedback. We have clearly defined what we mean by mainstream media. And then when it comes in that mainstream media, from there you have to respond.
Yes, Mahalakshmi, please.
Just one thing, on the mainstream markets, it gets displayed 24 hours post that, or before it getting displayed also, we write it comes 24 hours
I think we have said from it being published.
Yeah, the moment it is reported in any of the mainstream media within 24 hours, they have to verify or confirm or deny it.
Yes.
आप खुश हैं कि दुखी हैं? हाँ?
Yes, Mahalakshmi, please.
Yes.
This is Mahalakshmi from Moneycontrol. Hi, this is Mahalakshmi from Moneycontrol. So, ma'am, both these things that have been talked about so far, one is the ASBA and the earlier shorter settlement cycle and the total expense ratio, all of these augur very well for retail investors, unit holders. The collateral damage out here seems to be the brokers. On one hand, discount brokers absolutely don't make any money. That's a different story altogether, but
which one are you looking at?
Okay.
I'm not looking at the same discount brokers you are looking at, Mahalakshmi.
So a significant part of even that money comes from float. Now this negates any possibility of float income for most of the brokers. Secondly, last year if you see the total turnover of mutual funds in equities was about 20 trillion. So which means about 3,000 crores the broking industry gets from the mutual fund industry, which is a large kitty now. That's almost 50% of what the broking houses, the entire industry makes. Now, in your mind, how do you see brokers and this broking industry really evolving? That's question number one. Second is the fallout of this total expense ratio is also that small and mid-sized funds might find it really challenging because right now they're drawing from a pooled resource base, which is the sell side in terms of research. Because even if you have a small, even if you don't have a small cap fund, you at least need research coverage on 300, 400 companies. So how do you see that space evolving? Because this seems to perpetuate, I mean, the perverse outcome of this could be perpetuating the competitive edge that the larger AMCs would have over the mid and smaller companies.
Okay. So, two separate issues, we'll try and address them separately. So, first of all, the discount brokers are making a lot of money. If you look at their P&Ls, Mahalakshmi, they're making a lot of money. Okay, why? Why? 20 rupees a trade, if there's a compulsive trader who's trading in, out, and we've published a report for all of you to see, the numbers are obvious. So first of all, let's be clear, people are making money. Okay? Now, the question is...
Even now, a significant part of it also comes from...
No, I'm coming to float. So first of all, the upstreaming of the funds, which we referred to, the benefit of the float at this stage of the proposal will still go to the broker. Right? So as I said, we co-create, we don't like jhatkas in the market, we do things smoothly. So there is no resistance. Why is everyone supporting us? Because they are getting their float income still the way that they were up to now. The question you asked is, how is this evolving? Now the question is, when you move into ASBA-like, okay? So I'll take you back in time, since we were both around when ASBA came in primary market. What was said? Oh, the issue expenses will shoot up because now this float income, the bankers to the issue were doing things for free. On the back of the float income, investment bankers were doing things for free. Now the cost of issuance is going to go up because all this float is going to go away. Right? We've heard this story before, we've seen this movie before. Right? So what did SEBI say? We said, but where did we say you shouldn't make money, bhaiya? Just unbundle it. What we don't like is hidden costs. Okay? And more than hidden costs, we don't like risk. To be honest, personally, and I'm speaking personally, this is not the SEBI view, but personally, I actually don't mind bundle costs. Bhai, hota hai, cross subsidy hota hai, that's how business is. What we don't like is the risk. We will never allow another Karvi in our market, period. Period. So there is nothing we will not do. Over our dead body, there'll be another Karvi. That's clear. Okay? Now, if in that process, the brokerage costs have to be unbundled, float separate, fee separate, so be it. It happened in IPOs. Did the world come to a collapse? No. People adjusted. They said, okay, there is this, float completely vanished. Everybody started charging what they needed to charge. So where is it evolving? It's evolving to a more transparent, unbundled method of fee charging, and both investors and intermediaries will get accustomed to it the way that they got accustomed in IPOs. The second, in terms of the TER, actually, let me tell you, the maximum resistance and petitions we are getting are from the larger mutual funds, because we actually at SEBI are very sympathetic. So one of the principles I forgot to articulate. Remember, I articulated some principles for the TER. One of the principles we've communicated to the industry is we want competition. We will not allow a schema which will go against small AMCs. So if you see, all the petitions that are coming from the big 5, big 7, big 8. Okay? Small people are not coming to us. They know we are protecting them because we want more it's a job of a regulator to make sure that there is more competition in the market, not less. So you will see as the schema evolves that there is a lot of protection to the smaller funds to allow them to settle, get their feet stable, make profits, etc. Okay, so I don't think that there's anything. As I said, the evidence, proof of the pudding is I have not got a single person meeting me from the bottom 10. I've got a lot of requests to meet me from the top 10. Okay, one thing I would say about this sell side, buy side, if you don't have the capability to run an active fund, please go to passive funds. And we are seeing some of the new entrants in the space to whom we have recently given licenses. They say clearly that we don't like the cost structure of actively managed funds. We want to go passive. We think it's the right thing for the investor and for us. And then our costs are very low. We will break even in year 1, year 2 itself. That's what they tell us. So there are many ways in which people can do this. But again, as I said, we are not, let me tell you again, there has been a lot of petition from the top funds saying SEBI should regulate how much money should go to distributors, how much should go for broking. We have said, why? It's your commercial decision. And in any case, if we put all these restrictions, it's the smaller ones who will suffer. So we have been very careful. We put no restrictions. You want to pay your broker, please pay him as much as you like. Wherever we said you don't pay him, we are just saying bring the spotlight on it by bringing it within TER. Keeping it outside TER where your board doesn't look at it, investor doesn't look at it, nobody looks at it, and God only knows where that money is going. You heard me articulate. See, I don't mince words, Mahalakshmi. We have seen, because we see the data, we base our decisions on data. There is enough data for us to believe that there was brokerage being paid for not so kosher reasons. But it is not illegal. We cannot go and charge them under any provision. So we are saying, very good. Let the AMC board examine, no, why you're paying so much money to XYZ broker. And then somebody said, oh, no, they facilitate corporate access. I said, insider trading, So what is the meaning of this thing called corporate access? Please let me know with whom they facilitated this corporate access and what information you got through this corporate access, which was not publicly available, which compelled you to pay 15 crores to the man. Would love to know. Please tell us, show us the data.
Sammy, business.
The Supreme Court order has instructed us to give a status update of our investigation to the committee. It says, in the terms of reference of the committee, it says SEBI should submit, in section 10, it says SEBI should submit a status on the investigation, on its investigations to the committee.
Yes, Sammy.
Thank you. I have a couple of questions. Will global index providers such as MSCI...
Menika, status of the investigation. You are a legal person, Menika. status of the investigation.
Actually, ma'am, it says SEBI should expeditiously conclude the investigation
Yeah.
within 2 months and file
Yes.
report.
Status report. Not the report, the status report. Please read it with your legal mind.
Requires conclusion of the investigation, so it must be an
That is a separate matter. No, no. Enough said. You can interpret the Supreme Court order. We are okay. Yes.
Yes, Sami.
I have a couple of questions. One, will global index providers come under SEBI's ambit now after this?
So we have a matrix. So again, let me go through principles. We don't do anything, isko kar lo, usko kar lo. No, there's a principle. There's a question, there are 3 columns. The asset class that is being covered, the location of the product user, right, who's using it, and the location of the index provider. So there is a matrix, and broadly speaking, if you are a foreign index provider who is incidentally having a Indian security in the index as part of a broader index, it will not come under our purview. But if you are a foreign index provider where you are doing a India-based index which is being used by Indian, let's say, mutual funds for Indian investors, then it will come under our purview.
So to enforce,
MSCI has dozens of indices. The MSCI India Index, if it is being used by Indian user, yes, then it will come under, so it will come under our purview. If it is not being used by, let's say, an Indian mutual fund, it's being used by FPIs overseas, we have nothing to say in the matter.
so essentially SEBI will bar mutual fund, if for, say for instance MSCI refuses to register, SEBI will bar domestic fund houses from subscribing to that index. Is that the right interpretation?
That's right. So what we will say is, obviously, it's like saying, let me give you an example. So what does RBI say? RBI tells its banks, if you use a credit rating, please use a credit rating from somebody who is registered by SEBI and accredited by RBI. There are two qualifications. Should be registered with SEBI and should be accredited by RBI. Please use their ratings, right? So just like that, even in ESG we have said, or we propose to say now, that Mr. Mutual Fund, if you are using, please use an ESG rating of somebody who is registered with us and complies with our regulation. Similarly, if you're going to use an index, please use an index provider who complies with this framework.
Yeah, thank you. I have another question on the recent finance bill changes, 2 critical ones impacting the stock market, and both are being pursued as negative for the market. So did SEBI give any feedback to the government essentially on STT and taxation of debt mutual funds? And also will SEBI allow different categories for debt mutual funds now so that, the taxation burden can be softened, tax burden?
So broadly speaking, I would say that we look at it in terms of principles. Okay? So if you ask yourself the question, what is it that really has been done here today in terms of taxation? There has been an equivalence drawn between a debt mutual fund and other fixed income instruments. Now, there is some argument, which is a valid argument to say, but no, it is vulnerable to market movement, interest rate cycles, mark-to-market losses, etc. But you know and I know that a very large number of the funds are either fixed maturity plans or target maturity plans. They are practically, for all practical purposes, you can pretty much assume you're getting a certain yield. Spirit of the law, letter of the law, right? So if in that context the government wishes to have parity and level playing field, what is wrong with that? What is wrong with that? So is it 100% so? No. Is it largely so? We see it to be so. So that's the question. The second thing is in terms of STT. As you know, STT right now is only imposed on the option value, on the premium, right? Need I say more?
Brajesh, see business. Please wait, Yash. You have asked enough. Let others ask. Brajesh.
Just to extend that question which he asked, you don't think that market
See, the implications are known. See, you must not think that people who make these decisions do not understand what are the implications. Why would you assume that somebody sitting there being responsible for the most important policy decisions of the country does not understand that this would mean that there would be lower inflows into mutual funds, and to that extent mutual funds would have less money to put into the bond market? Why would you assume they don't know that and don't understand that, right? So policy making is all about the trade-offs. And if the trade-offs are, and it's not just about the corporate bond market, equally it is true for the sovereign bond market as well. Because how much of the money of mutual funds goes into sovereign debt? You think that the government does not appreciate and understand the consequences for sovereign borrowing. Forget about corporate borrowing, about sovereign borrowing. So a policy maker's job is to weigh the pros and cons and decide which way to go. And if they saw this as an anomaly, to say that you do not have a level playing field in respect of all debt instruments and we need to slowly do that, what is wrong with that?
Actually, his question was, were you consulted?
That I will never comment upon.
Yeah. Okay, Brajesh.
I heard the question.
Yeah. Please use the mic, please. Brajesh, please use the mic.
मैम ब्रजेश जी बिजनेस से 3-4 सवाल हैं।
वो 2 पूछ लीजिए, बाद में आएंगे आपके पास।
उसके बाद
वेट किया उन्होंने।
यस मैम, थैंक यू फॉर रिकॉग्नाइजिंग दिस। पहला सवाल ये है मैम कि कोई भी एंटिटी आएगी, कुछ भी रिपोर्ट पब्लिश करेगी, हमारे मार्केट को डिस्टेबलाइज करेगी। प्रीएम्बल कहता है कि सेबी इज टू प्रोटेक्ट इंटरेस्ट ऑफ इन्वेस्टर्स। तो वहां हमने जो अब तक किया, क्या लर्निंग रही?
You know I won't comment on that. तो एक सवाल तो आपका बेकार गया।
नहीं, बेकार नहीं गया। मैं किसी इंसिडेंट की बात
नहीं,
ये
स्पिरिट ऑफ द लॉ, लेटर ऑफ द लॉ वाली बात है।
मैम ये कह रहा हूँ कि ऐसे इंसिडेंट फर्दर हो सकते हैं।
सवाल का जवाब दूंगी नहीं। चलिए आगे बढ़ते हैं।
ऐसे इंसिडेंट आगे भी कोई कर सकता है ऐसे?
The matter is entity related, the matter is sub judice, और जो हमें कहना होगा हम उस प्रोसेस के बाद ही कह पाएंगे। हम इस स्टेज पे हमारा कुछ कहना बहुत ही इनअप्रोप्रिएट होगा।
ओके मैडम, सवाल पॉलिसी दूसरा
इसी को एक्सटेंड मैडम, एज अ पॉलिसी when an entity says that we have shorted non-Indian traded derivatives in the overseas market, this is a policy question I'm asking. It's not about an entity. Is it allowed?
This is नहीं, आपको भी पता है कि हमारे लॉज क्या हैं। आप तो हमसे ज्यादा ही बेहतर ही जानते हैं। तो आपको भी पता है क्या लीगल है क्या नहीं लीगल है। इस बारे में हम चर्चा नहीं कर पाएंगे। आप प्लीज हमें माफ करिए, हम इस बात में चर्चा नहीं कर पाएंगे।
मैम दूसरा सवाल, मिनिमम पब्लिक शेयर होल्डिंग और वर्सेस फ्री फ्लोट को लेकर पिछले 1-1.5 साल पहले से चर्चा शुरू हुई थी कि इसको फिर से देखने की जरूरत है। तो उसमें क्या किसी निष्कर्ष पे पहुंचे हैं?
वही स्पिरिट ऑफ द लॉ, लेटर ऑफ द लॉ वाली बात हो रही है। ये भी आप कृपया इंतजार कीजिए, आप कतार में हैं। आपके पहले सुप्रीम कोर्ट है सर।
मैम तीसरा सवाल
जी,
हाल के दिनों में कुछ ऐसे सौदे हुए, हालांकि उसमें कुछ एबनॉर्मलिटी नहीं है, लेकिन क्या रिस्क है? क्या एक म्यूचुअल फंड दूसरे म्यूचुअल फंड में हिस्सा खरीदता है एज पार्ट ऑफ इन्वेस्टमेंट या जो भी कह लीजिए, कहीं कोई रिस्क नजर आता है इसमें आपको, या आगे जाकर हो सकता है?
कौन सा? मुझे
एक म्यूचुअल फंड दूसरे म्यूचुअल फंड में, तीसरे म्यूचुअल फंड में हिस्सा लेता है एज एन इन्वेस्टमेंट।
SBI बैंक और SBI AMC bought 2.5% in HDFC AMC।
कहीं कोई लिमिट हो सकती है इसकी?
10% का लिमिट है। हाँ, nobody can hold more than 10% in two AMCs। नहीं, रूल है 10% का।
एक मैम और जिस तरह के अगेन लगेगा मैं रिपीटेड सवाल पूछ रहा हूं, लेकिन फिर भी मैं पूछना चाहता हूं। इनसाइडर ट्रेडिंग रेगुलेशंस को रीडू करने की बात हो रही कोई चर्चा है? क्योंकि एक के बाद एक जैसा कि हम देख रहे हैं, तो क्या इस रेगुलेशन पे ट्रेडिंग स्पेसिफिक को लेकर के अलग से इनसाइडर ट्रेडिंग रेगुलेशंस में अमेंडमेंट की कोई बात हो रही है, या कैसे आप इसको टैकल करेंगे?
आई डोंट नो एक्चुअली। अगर आप वही अदानी हिंडनबर्ग की बात कर रहे हैं?
नहीं मैम, नहीं उसकी बात नहीं कर रहा मैं, उसकी बात नहीं कर रहा।
पहला क्वेश्चन दूसरा आया था I didn't answer it fully actually कि जो 25% हमारे रिवर्सल्स हो रहे हैं कोर्ट केसेस में, वो 25% तो हो रहे हैं, हम उसको एनालाइज करें कि भाई उसका क्या इलाज है. तो उसके इलाज के लिए हमने एक मैं कहूंगी नए सिरे से एक अप्रोच लिया है रेगुलेशन के लिए, जो कि फ्रंट रनिंग, इनसाइडर ट्रेडिंग, प्राइस मैनिपुलेशन वगैरह, उन सब के तहत हम लोग एक फ्रेश अप्रोच ले रहे हैं. उसकी चर्चा चल रही है. उसमें काफी लीगल पेचीदा एंगल्स हैं, उन्हें हम रिजॉल्व करने की कोशिश कर रहे हैं. तो उस एंगल से कि हमें जो सेटबैक्स हो रहे हैं और मार्केट में जो ट्रेंड चल रहा है कि लोग अब मतलब बेतहाशा म्यूल अकाउंट्स खोल रहे हैं और उन म्यूल अकाउंट्स के अंदर ट्रेडिंग चल रही है, and given all the vanishing messages and vanishing WhatsApp and vanishing Insta and vanishing Telegram and all of those things, वो जो ट्रेडिशनल एविडेंस की जरूरत होती थी कि आपको प्रूव करना है कि ए ने बी से बात की, अब तो हो ही नहीं सकता है. अब कहाँ जाएंगे, कैसे प्रूव करेंगे? सो ये इन सब चीजों को मद्देनजर रखते हुए हम लोग एक नए सिरे से रेगुलेशन बनाने के प्रोसेस में हैं. पेचीदा है, लेकिन हम उसे कर रहे हैं इन रिस्पॉन्स टू that 25% of the cases that we are losing, where we believe that the letter of the law may not have been violated, but the spirit of the law was thoroughly violated. So हम कोशिश करें.
एक सवाल और है, म्यूचुअल फंड पे जो कि ओवरसीज पे जो ओवरऑल लिमिट है, उस लिमिट के लिए क्या मैम एलआरएस की स्कीम के बारे में सोचा जा सकता है कि एलआरएस रूट के जरिए ये इसकी लिमिट बढ़ाई जाए? ये पॉसिबिलिटी है क्या?
I think म्यूचुअल फंड इंडस्ट्री ऑलरेडी आरबीआई के साथ बातें कर रही है, चर्चा कर रही है, वो उनके तहत आता है. तो वो जो परमिट करेंगे एलआरएस से उनके तहत आता है. तो वी हैव नथिंग टू से इन द मैटर.
Question here from the back, Sriji Raj from Informist. There is a lot of talk about Indian promoters and entities using offshore accounts, offshore companies, shell companies, etc.
Spirit of the law, letter of the law, I will not respond to that question.
No, I'm just wondering, is SEBI...
I will not be in a position to respond to that question.
Okay, so you are obviously looking at it from the angle of that particular case. I'm just wondering if SEBI is
I will not be in a position to answer that question.
Kaiser, please. Kaiser, I'll come back, please. That people have not asked the questions. Kaiser.
Ma'am, about your corporate debt market development fund, you explained how the corpus of this fund would be set up, like 3,000 crore from the AMC's contribution and 30,000 crore would be the sovereign guarantee. Out of the 3,000 crore, correct me if I'm wrong, I heard that you said 10% contribution would come from the AMC's capital and 90% would come from the scheme's total expense ratios, right?
No. From the scheme's portfolio. They will subscribe to the units of this fund.
Okay, they will subscribe to the units of the fund. Now, what I wanted to ask you a couple of questions about these. So, first of all, would this facility be voluntary or would it be made mandatory for all funds? Number two.
Mandatory for the identified schemes. So, like for instance, overnight schemes don't need this protection.
Credit risk funds will not come in this, obviously.
Credit will.
It will, okay. Because they are taking risks knowingly, it's the other funds, debt funds, who are not supposed to take credit risk. I'm wondering why you're taking credit risk funds also in this particular.
See, at the end of the day, the question is that you also want to develop the bond market. See, if everyone only wants to buy super AAAs, so where will the bond market develop? So while we can all feel concerned about the issues of credit risk funds, at the end of the day, so long as the investor has consciously gone and bought those units, knowing what risk he or she is taking, riskometer, this, that, and the other dynamic, there is no harm. After all, in equity, you allow people, no, you allow them to go and take, risk. I mean, even within equity, you say, okay, let's go do small caps, let's do mid caps. They are obviously riskier than, the Nifty. So, you cannot stop investors from taking risk, but here the objective is And in fact, if you see the preamble to what the Honorable Finance Minister said in the budget, that it's really to take care of what happens in the bond market. Actually, the manifestation is through the mutual funds. But the challenge that you're trying to address is through the, is in the bond market. So it's very essential to address the lower end of the rating spectrum as well. Sorry, Mr. Barua has reminded me, someone had asked just how much of it is coming from the schemes. It is 2 basis points of the AUM of those identified schemes, 2 basis points. So the schemes will subscribe to the units of this one.
So basically it's going to be mandatory
mandatory for
it's
those.
Going to be mandatory.
Yes.
And is it going to be also relative to the, okay, so it's going to be obviously relative to the corpus of the scheme because it's going to be a percentage of the corpus.
Yeah.
And ma'am, last question about the role of trustees. When you're reimagining the role of trustees, can you explain some granularity about the duties that you would take away from the trustees and put it on top of the AMC heads?
I don't have it here, but essentially the team sat and all the procedural nonsense, I'm sorry to say, which was all tick box stuff, so all been taken away.
And you had also suggested in the concept paper that some kind of an indemnity is going to be made available to trustees. Have you also included that in your final guidelines?
Already there is a provision in the regulations. There cannot be anything which seeks to remove the indemnity. Means there cannot be indemnity for the trustees if there is a failure to exercise due diligence. That provision is already inbuilt in the regulations.
Okay, thank you. Next.
नमस्ते, अनुराग ईटी नाउ स्वदेश से। मैम 3 छोटे-छोटे सवाल है। ये जो अमेंडमेंट ऑफ स्टॉक ब्रोकर रेगुलेशन में बात की गई है, तो क्या इसके बाद पूरी तरह से नई डेफिनेशन आपके द्वारा जारी की जाएगी? और थोड़े दिनों पहले एक रिपोर्ट जारी की गई थी आपके द्वारा जिसपे कहा गया था 90% तक ट्रेडर है ऑप्शन के अंदर वो लॉस बेहर करते, तो उसके पीछे क्या मकसद था, क्या मैसेज आप देना चाहते हैं? और आज के अंदर जो एलओडीआर रेगुलेशन के अंदर रूमर्स को क्लैरिफिकेशन की बात कही है, जिसमें आपने अभी बताया भी 24 घंटे के अंदर, लेकिन एक ऑप्शन दे दिया आपने कि एक्सेप्ट, कंफर्म, डिनाई और क्लैरिफाइड। तो वहां पर हमेशा ज्यादातर यही देखने को मिलता है कि जो कंपनी का रिप्लाई होता है वो इस तरह का होता है कि ये तो प्रमोटर का या कंपनी का उद्देश्य रहा है हिस्सा खरीदने का और ये तो हमेशा इसकी बात चलती रहती है। तो ये क्लैरिफाइड में यस नो ही होगा, क्योंकि वो रिप्लाई हमेशा ऐसा होता है जिसका कोई सेंस नहीं बनता है।
जो इन्वेस्टर लॉसेस थे उसके बारे में पहले बात करूंगी। आपका जो ब्रोकर रिलेटेड क्वेश्चन था मुझे ठीक से समझ नहीं आया, बट विल कम बैक टू दैट। हमारा उद्देश्य क्या था वो रिपोर्ट पब्लिश करने का? हमारा उद्देश्य 2 सिरों से है। पहली बात तो ये कि जो हमारे मार्केट में जो हम कहते हैं इन्वेस्टर्स लेकिन एक्चुअली ट्रेडर्स हैं, ओके, उनको पता होना चाहिए व्हाट आर द ऑड्स दे आर प्लेइंग। क्योंकि हर एक आदमी समझता है मैं तो प्रॉफिट बनाऊंगा, लेकिन उनको पता होना चाहिए दैट 90% प्रोबेबिलिटी इज यू विल लूज, and you will lose 1 lakh of rupees, 70,000 of actual loss and 30,000 in brokerage, transaction tax, SEBI tax, NSE tax, STT, everything put together. You should know that you are going, there's a 90% probability you're going to lose money. Okay? So ये जो है हमारे लिए ये एक रिस्क फैक्टर टाइप चीज है। जैसे हम आईपीओ में कहते हैं कि आप आईपीओ देखते टाइम आप रिस्क फैक्टर पढ़िए, हम कहते हैं कि आप एफएनओ में जब उतरते हैं तो आप पहले ये रिस्क फैक्टर पढ़िए कि यू आर प्लेइंग द ऑड्स व्हिच आर परहैप्स वर्स देन लास वेगस आल्सो। आई डोंट नो द ऑड्स इन लास वेगस, आई एम सॉरी, आई नेवर गॉन देयर, बट आई कांट इमेजिन दे वुड बी मच वर्स देन दिस। सो आपको पता होना चाहिए कि आप किस चीज पे आप क्या दाव लगा रहे हैं। दूसरी चीज ये है कि इसका नेक्स्ट स्टेप जो है, अभी हमने रिपोर्ट पब्लिश की है, इसका नेक्स्ट स्टेप जो है हम जो ब्रोकर्स हैं उनके थ्रू ये जो रिस्क फैक्टर है वो डिस्प्ले करने को हम लोग मैंडेट करेंगे कि जैसे ही जिस तरह से आईपीओ एड में वो रिस्क फैक्टर आना चाहिए, तो अगर एक जो इन्वेस्टर स्ट्रोक ट्रेडर है वो ये करना चाह रहा है तो उसको ये रिस्क फैक्टर दिखना चाहिए। सो ये हमारा पहला स्टेप था और अगले स्टेप में नेक्स्ट ईयर्स के आ रहे डिस्प्ले ताकि इन्वेस्टर को पता चले। ये जो र्यूमर वेरिफिकेशन की बात आपने की, आई थिंक सही है, लेकिन हमें कहीं पे बैलेंस करना पड़ता है कि कभी कभी जो र्यूमर्स होते हैं वो भी मलिशियस टाइप के भी हो सकते हैं, मोटिवेटेड भी हो सकते हैं। तो हमें ये बैलेंस करना पड़ता है कि हम कितना ओनस लिस्टेड कंपनी पे डालें और कितना ओनस किसी और पे डालें। तो अगर बहुत ही स्पेसिफिक र्यूमर है तो कंपनी को बहुत ही स्पेसिफिक आंसर देना पड़ेगा। एक फिशिंग टाइप र्यूमर है तो फिर फिशिंग टाइप जवाब दिया जाएगा। तो दोनों तरफ से हमें बैलेंस करना पड़ता है। अब देखें आगे जाके कि क्या होता है, किस तरह से लोग रिस्पॉन्सिबली करते हैं, स्पिरिट ऑफ द लॉ किस तरह से अपहोल्ड होता है, लेटर ऑफ द लॉ किस तरह से अपहोल्ड होता है।
Ma'am, just
Just one sec, Mr. Mohanty would like to add to that.
So basically the rumor should not be a general kind of a rumor. It has to be pertinent to certain specific information, event or the transaction or anything, which indicates that rumors of an impending specific material event or information in terms of the provisions of the regulation. So it has to fall into the definition of that material event or specific. Generally they have to clarify. And if the company is confirming, they have to give the current stage of status or whatever. If they are clarifying, then in that case, they have to clarify if the rumor is pertaining to something from originating from outside or it is internally generated, also from some branch, factory or whatever. So they have to specifically clarify. So your apprehension that they'll simply try to say something and brush it aside somewhere, may not possible. They have to give it specific.
ma'am, just to have a little clarification on this question.
Ma'am, this is Jayashree from Reuters. Ma'am, this is regarding the high value debt and the corporate governance norms related to that. I believe in the discussion paper we spoke about that the creditors should have the right to vote on any rated party transactions. The press release doesn't mention that. Is this still a part of the?
No, that is where you're right. You're right.
Yeah.
So that was one of the areas where there was a set of companies who successfully demonstrated to us the impossibility of compliance. So because it was impossibility of compliance, they said, what do we do now? So we said, okay, hold on. We'll continue this comply or explain for some time and sort it out in due course. So that was one area where it was, the market feedback was correct.
Right. Ma'am, the second question is with respect to we have some 11,000 FPIs, and many of these FPIs are invested in a single company. I'm not talking about a group, but a single company.
I will not be in a position to answer that question.
just my job to ask.
Yes, of course. And my job not to answer.
I have a follow-up question on the FPI part only, because there have been several changes through notification also in the regulations for FPIs, and some clarifications, I believe, sought from SEBI on the unique beneficial owners.
I will not be in a position to reply to that question.
It's not a company-specific question. It's a
I will not be in a position to reply to that question.
Actually, ma'am, just some other clarifications that are required.
Kushbu will come back to you. We'll just already somebody said. Menaka, you wanted to ask some question, yeah.
Sorry, I have two quick questions. One is to do with this backstop facility.
Just one sec. Did I quote some wrong number?
No. I was just trying to, on the trading part, today's numbers, the cash transactions were 60,000 crores, F&O was 380 lakh crores, 600 crores.
और वो भी सर कैश में no, this is notional. Trading volume they give notional, but sir abhi to this is only half the story. Cash में a large proportion is intraday. Delivery based out of that is very small. So if you take all of that, the delivery based तो इतना सा बच जाता है sir हमारी market.
Yes, Menaka.
Yes.
Sorry, I have two. Thanks, Harry. I have two questions. One goes back to the backstop facility that you referred to. Now, the purchase of these securities, and I understand that maybe some of these details will be available when you publish the framework in more detail, but the purchase of these securities in times of stress cannot be at market rate, because obviously the suggestion is that the market rates have dislocated completely.
That's right.
Have you thought through what the...
Oh, yes.
So will that be in the
Oh my God, at
framework
least
details?
100 man-hours of my time, and I'm not even counting my team members, has gone into the discussion on what would be a fair market value, which is not a distress value, but at the same time is not a let's put any junk there at any price value. So it's been very actively deliberated, outlined, articulated, and risk mitigation mechanisms put into place. It'll all come in the detailed specifications, but it's not being left to chance at all.
No, of course, I didn't think it was, but I thought if there was anything you could share with us at this point in time. When does this become effective is what I wanted to ask about the backstop facility. When do you expect it to be up and running?
So I'm guessing here, but I would imagine in the next 3 to 6 months it would be up and running.
Okay. And I have one more question. And I know that the spirit of the law and the letter of the law all need to be respected, but there are more FPIs in the country than those invested in Adani's. So I will ask you a question on what is the progress SEBI has made on the beneficial ownership regime and the disclosures that have been mandated
I will
across
not be
the
able to answer that
But there are
question.
more FPIs, ma'am,
Of
than
course there
invested in
are.
Adani.
Of
This
course
is not
there are.
specific to a group of FPIs.
Of course. We'll answer that in due
Beneficial
course.
ownership is critical to the PMLA functioning.
We will
functioning
answer that
of-
question in due course. Right now, I'm not in a position to answer. It would not be appropriate.
PTI Ben.
Ma'am, this is Ben from
Thank you.
This is
I'm not asked.
Are very important. Only for a systemic issue. So if a particular mutual fund is facing a problem and there is no market-wide disruption, sorry, the facility is not available, you should have done better risk management.
Yeah, Benichan, PTI.
This is Ben from PTI. It's going back to the cases that you lost at Supreme Court or the appellate tribunal. Why don't you go for a review petition, especially in the case of...
Sorry,
NSE?
I couldn't hear properly.
No, why SEBI leaves a case that you lost at a High Court or a Supreme Court and there? You can go for a review petition, right? Especially in a large case like NSE.
Review petition, no. Review petition is only for apparent error, right, sir? So if it's a point of law, you cannot go back to the same forum, only if there's an error apparent in the order, factual error
But SEBI
apparent.
has not done anything of that sort, right?
Sorry?
SEBI has never gone back to the Supreme Court. Is there a single case?
Sorry, I didn't understand.
SEBI has not gone back to the Supreme Court saying that, okay, the apex court was wrong in certain parameters. You say that it is the case of the spirit of the law that is violated.
Oh, I don't know the answer to that question. I don't think so. I don't think so.
There is a specific section, section 15J, on the question of law can go to the Supreme Court. As far as the review is concerned, if you see, there is a very rare case, it's not on the SEBI, they go for review. Okay. Even, okay, thank you.
Yes, please. Yeah.
Two things. First, on the market rumor verification, there are numerous number of news stories which the media reports. But when it comes to rumor verification or responding to media reports, I would suggest that SEBI ask the top 100 companies or whatever is the count to have a dedicated email ID, because most of the time we find it difficult to have a relevant email ID and get a response from that particular email ID. So would request that if there is any
We should do that, and we should make the company secretary responsible, na, sir?
Because most of the time we find it difficult to get a response in the 24 hours window. Ma'am, one question regarding the National Stock Exchange. There was already a SAT order which came. Has SEBI appealed in the Supreme Court regarding the SAT order?
We don't comment on entity-specific issues.
Okay, thank you. Next you, please.
No, it's an entity-specific issue. भैया हम नहीं कमेंट करते हैं, हमारा एक्शन आएगा तो आप देख लीजिएगा ना.
Yeah, please.
So, ma'am, my question is about the front-running issue. I wanted to ask if there is any kind of surveillance infrastructure that you are thinking about for it, to add a bit more color about extra allocation of capital or something that?
So we are in the process of actually again co-creating with industry. So it takes us a little bit longer. See, if we wanted to unilaterally do it, we would have probably done it 3 months ago, but we don't like doing that. So we are co-creating with the industry a set of measures that particularly the mutual fund industry, and later it will be rolled out to other large investors, that they need to have in place to detect front running. So it was argued to us, and the argument was completely demolished within 30 seconds, that the funds did not have enough information like SEBI to identify front running. Within 30 seconds that argument was demolished, at which point they promptly accepted that yes indeed they had all the information they needed to be able to detect front running. So we are now discussing with them as to how and in what manner they need to do it and who needs to be accountable and what action do they need to take if they find that there is a suspect, what kind of employee contracts they need to have, what should be the clauses in the employment letters, etc., etc. And therefore, that is all under construction right now.
Khushbu?
Hi, ma'am. Mostly you have attended to all the major questions. Hi, ma'am. Just wanted some clarities on the ASBA facility that you have said. First, it is optional that you said, but then you said that top 10 brokers might be mandated at some point. What is that some point? What is the timeline?
Not yet. Glide path will come to that.
Okay. And the second part in the upstreaming of client funds daily dictate, that part you have said that phase 1 of the framework is expected from from July 1 onwards. For this also, there will be some number of brokers on which this phase 1 will be applicable?
No, phase 1 is applicable for everybody in the form in which it is currently. Okay. You remember I mentioned something about portability across clearing corporations.
Yeah, right.
That would be phase 2.
Okay. So, and another last question from my end. On the ESG rating providers, because on one part we are making assurances for the ESGs. In the consultation paper, there was part that they'll have to register under credit rating agency norms. So, and I believe there were some submissions which were against that norm, that they don't have the eligibility to comply with those regulations.
Yeah, so we've created, we've taken that feedback and we've accepted it. So we're creating a separate chapter under the credit rating regulations, credit rating agencies regulation. And there are some two categories of these ESG raters, which were one which is very, very low bar in terms of allowing people to come into the system and use technology and use knowledge, etc. to do, and some which are the more larger ones.
So now they don't have to register under this?
They will. It's just a separate chapter, so the same requirements of a normal CRA don't apply, but they do need to register, but there are separate, more, less stringent conditions.
Also, last question on the FPI part again. Because
Any questions you're saying last?
Just last question.
Yeah, please.
FPI तो मैं जवाब दूंगी नहीं. आपको पूछना है, आप पूछ लीजिए.
FPI.
Yes, Palak.
Okay.
Yeah, madam, this time and again, SAT has made an observation that, SEBI has been outsourcing its investigations. So can you make a comment? And SAT is very angry at that, as to why SEBI has been outsourcing its investigation. It has termed it silly and sort of.
So here's the thing. We believe that increasingly SEBI will need to, just like SEBI has developed the capability in terms of market surveillance. And again, I would only quote, I must admit I've been to IOSCO meeting once physically and numerous times digitally. And the first time I went, I was not very sure. You're going into a new forum of this nature. I very rapidly realized that we're really in a good place. So when I speak about the level, granularity of information and analysis that we are able to do in our market, Okay, for instance, you know that we are able to do algo level analysis, right? We know which order has come from which algo, and if somebody has registered an algo claiming that it is an arbitrage algo, and when we observe its behavior, we say, that doesn't look like an arbitrage algo. That's the level of granularity we have, and across the world, across all the developed markets, they are shocked at the capability that we have as a regulator and in the market. So I must say, first of all, I go back to this thing of saying our market stack in India is really fabulous. So we've developed a lot of capability, and a lot of what you're seeing as our insider trading and front-running cases, we have limitations in law. We are facing that setback. We have to fix it. We are working on it. We will fix it. But in terms of forensic audit, we have zero capability. Now the question is, it is not possible to develop that capability overnight. So the first thing is that we need to go up the learning curve on that. Many of you may have seen that we have an open advertisement, one set which says forensic auditors for companies, one thing saying forensic auditor for mutual funds, abhi next shayad Anant aayenge forensic auditor for brokers. Okay, so we are conscious that this is a skill set which is henceforth going to be required and which we are lacking. So first we must develop that capability to do that, initially with outsourcing, with partners, etc., etc. Now, the question of saying that do you ask the regulated entity itself to do its own audit is the question which has been asked of us. That's correct. So we are seized of this issue. There is again a complexity of law. There is a complexity of law. You know, everybody assumes, I mean, I assume Menika or somebody would be able to bail me out here. Everybody assumes that SEBI has unlimited powers. Boss, aisa nahi hai. Our parliament is very sensible. They have given us a limited set of powers within which to operate. We are not a Brahmastra kind of regulator.
Madam,
okay?
Super regulator.
We don't have, many of the powers, I mean, I really am dying to say something to you, but it falls into that category of I cannot comment on it at the moment. You will be shocked at some of these nuances of the law, which and it's our fault. You know, I always say it's our fault. We have never communicated. How is the world supposed to know all these nuances? So what I'm saying is there are certain nuances in law which have required us to act in a certain way. Do we believe we need to fix that? The answer is yes. Are we on our way? The answer is yes. It takes a little bit of time, despite the speed that you see. All of you only tell us how many more consultation papers you're going to do. We are dying tracking them. You know, we are literally being told overactive regulator and all that. So now,
one more.
Correct, no?
Important statistics is.
So ये करना पड़ेगा, करेंगे.
One more important statistics is, madam, you said, your 25% of cases in Supreme Court are, 75% cases, yeah, again.
We win 75%.
But what is the statistics in SAT? I think
80%.
I think 80% cases are going against you in SAT.
No, it's the reverse.
I think it's the small cases you win and all the big cases you lose.
Arey Baba.
And extremely bad comments come from SAT. Your initiative of getting the SAT judges to SEBI when you became the chairman has all failed, I think, very badly.
No.
Report which is SEBI has succeeded. You report.
Sir, all small cases you succeed. All big cases you.
In any case, see, my
you tell me at least. Can you show me 5 big cases where you have won?
It doesn't matter. There is data, na. There is data.
Yeah. Can you put that data out?
Yeah. Arey, we monitor it. Yeah. Pull it out. What do you think I do for a living? Pull it out. It's just not in the top of my head right now. Huh? Data is in the annual report also. So actually we have a very good success ratio in SAT also, by the way. So higher than 75% is my recollection. So this is the thing that, see, public perception gets formed, right? Every flight that lands never gets reported. The one that falls out of the sky gets reported. So, abhi kya kare? You only like to report the crashes. We don't blame you, bhaiya. You have readership to look after and viewership to look after. So, aap to karenge. But the statistics are otherwise. Now, the question of saying that, go back to the core issue, because I think what you're raising is an important issue, that going forward, there is a skill set which we do not possess in SEBI. We need to develop it. We are in the process. We intend to fix this problem.
Thank you. Yes, Sajid.
Hi, ma'am.
Ma'am, yep.
1 second.
Thank you so much. Thank you. So, ma'am, this is Subhana Sheikh from Informist Media. On developing of the corporate bond market, I actually wanted to ask, from past 6 to 8 months, I've been seeing that SEBI has been quite aggressive, in terms of new consultation papers and getting new schemes in. What do you think should be done in terms of, developing the secondary market, given the, in terms of price discovery, liquidity, volume? What is your view on that?
So there are two things that we are doing there. One is we are encouraging more and more on the EBP platform.
Yes.
And we had taken this up very early on. I remember the first few meetings that I requested all my fellow regulators to say, please, can you encourage your regulators to come on board on EBP? Sorry, I'm so sorry. RFQ. I'm so sorry. RFQ, request for quote. The statistics are just amazing. And I think that just speaks volumes for interregulatory appreciation, interregulatory cooperation. You see the numbers in terms of, apart from our regulators, mutual funds to upar because हमने बोला करिए वो किया. But you look at the banks, there is nothing in writing in terms of mandate. But it's a good practice. You look at the banks, you look at the NBFC. NBFC is little lower. Banks are like right up there on RFQ. You look at insurance companies, insurance regulator had actually mandated. But they had mandated some 10%, it's well above. So actually the RFQ mechanism through interregulatory cooperation and collaboration has really worked well. So I think that was the first step that we needed, and it's working well. So you now have transparency. Someone can actually build a yield curve off of it, which up till now was just such a challenge. The second thing is in terms of retail participation, and the proposal that we have approved already, right, on the online bond trading platform. So that we hope will again start to bring retail participation into the market. So with the transparency of the OTC market and the retail market coming in on the main exchange, we hope that the next step will be taken. We are also working very hard, again, another huge success in terms of interregulatory cooperation is that the Reserve Bank of India has approved, in principle, some 2 or 3 approvals are required. The last one is awaited on the Limited Purpose Clearing Corporation for the repo. So that's going to be another major milestone, and we are awaiting that. Out of the 3 or 4 approvals, 3 have come, the last one is awaited. Huge support from the Reserve Bank of India. And so once we get that, the corporate bond repo market will also get a fillip. And that's another very critical step in the development of the bond market. So this is we had come up with a regulation where we facilitated something called Limited Purpose Clearing Corporation, which would not do anything other than settlement of corporate bond repo. Now, because repo is a money market instrument, naturally it comes under the domain of the Reserve Bank of India, so we worked very closely with them. And as I said, that there are 3 or 4 different approvals needed from 3 or 4 different departments of RBI. Every other than one has come, so it's only a matter of time. And basically it was the 2 regulators sitting together and figuring out that in order to develop the bond market, you need liquidity. And if you need liquidity, you have to have market making. If you need market making, you need a repo market. Without a repo market, you cannot have market making because the cost of borrowing is just too high. So this is considered a very essential building block to the development of the bond market. So which is why, we sat together and did that. And again, This is an initiative, by the way, which the mutual fund industry, so when I say spirit of the law, letter of the law, and we speak so positively about the industry, they are the ones who are again putting their money where their mouth is in terms of the limited purpose clearing corporation. The AMCs will be the promoters, and they are putting the money in there to be able to do that, and we worked out a mechanism, etc., and that's what's going to happen. I think if you just search for LPCC, we already have the framework. Now it's only a matter of we get the last letter and, we put things in action.
But ma'am, don't you think that
3 to 6 months we should be up and running? Only the last one. There are 3 or 4 which are needed. They've been very, very supportive.
Ma'am, one second. So just a follow-up question on that. Don't you think that the corporate repo market would end up becoming just a hedging tool for investors?
Hedging?
Hedging tool, hedging.
Hedging? No. Corporate bond repo is really to be able to borrow against your corporate. So if, like you have the GSEC repo market,
yes, exactly.
So you can go to the market, give your GSEC and get cash. Right? Like that, the corporate bond repo market is, you go to the market, give your corporate bonds, borrow at effectively the overnight rate plus a little bit, some marginal amount. So it's a low-cost way of doing short-term funding of your inventory of bonds. Okay. It's not a hedging.
Okay. All right, thank you.
Who are hold to maturity, they can
Reena, please.
Ma'am, hi, Reena from ET. I want to ask you 2 questions actually. One is on the, could you give us an update on the...
I'm sorry, Reena.
Could you give us an update on the ESMA stand on the joint inspection of Indian clearing corporations? What is, because I think March 31st was the deadline.
So as you know, the deadline has been extended both by the German regulator and the UK regulator. So there is there's no immediate issue now. So we stand by, we have this is a matter where we cannot take a single one-sided view. It is a view that the Government of India, the Reserve Bank of India, and we take together. So therefore, this is the view that has been taken, but we do not expect any disruption, even if tomorrow, supposing that new deadline comes, we don't expect any disruption because we already had a plan B in place. We worked with the market players, the big ones who would be impacted. There was a plan B, it has been actioned. Our regulation is in place to action plan B. We do not expect any disruption in the market, even if agreement fails to be reached. Yeah, but I'm saying, as far as we are concerned, we have a plan B, bhaiya humne implement kar diya.
Okay. My second question is on the 81 bonds actually. A lot of banks have been raising funds for this, and there are some disclosures which SEBI has mandated. But do you think it's sufficient in terms of the kind of risk actually investors are taking when they invest into these bonds? And unlike an equity, it's a complete, they really don't get anything when there is a write-off that happens. So do you think there has to be more disclosures on this front, that whenever a company comes every time to raise funds, in terms of creating an awareness for investors?
I would say that, the disclosures are there. I don't know whether anything more by way of disclosure can be made. I think the debate really is as to, and there are different treatments, and that's what, amongst all of us regulators, there is a discussion and debate as to whether we should call them bonds at all. Right? So IRDA, for instance, does not permit the treatment of 81 bonds as a bond. It treats it as equity.
Right.
Right? Now, in some ways, the nomenclature itself is misleading. So if you ask me disclosure, I'm saying disclosure will come later. First, let's fix the nomenclature. Right? So do we need to fix the nomenclature is the issue. And as I said, that currently, SEBI is treating it as a bond. So our debt funds are allowed to invest in it, right? IRDA says, no, it's not a bond at all. Right? So this is a wider issue, and it is a subject where, as I said, interregulatory cooperation, collaboration, discussion needs to happen. So this will, need to get resolved along the way.
Thanks.
Yeah, last three questions. Sajid first.
Ma'am, a couple of questions here. One on the self-sponsored AMC. You said after a size, the sponsored will be allowed or they have the option to exit the AMC. Is there a threshold that you have put in place? At what threshold that option will be available to the sponsors? The second one is on the perpetual directorship. Is that means that many of the companies where this thing is existing, they will have to make amendments to the articles of the company so that, and many of the companies are coming to IPO. Are you at that point in time asking them to make this amendment to articles and come to you? And the third one is on the AIF amendments, which is there. You said AIF with above 500 crores will have to demat their units. What portion of the total AIF industry will be part of that? And when you say illiquid assets at the time of liquidation, now AMFI has a process of valuation of illiquid assets which is there, which is done I think on a daily basis or a weekly basis, which is done. Is something similar which has been proposed for the AIF industry as well?
No. Okay, so quickly, self-sponsored, so there is that if the sponsor says they wish to dissociate, then they have to drop their holding below a certain level. I think the number is 10%. 10%. So they're right now, let's say minimum holding as a sponsor 40%. If they want to dissociate themselves, they are given a certain amount of time to come down to below 10%. Right? So because your intention is to exit, we are facilitating exit. So you have to come down below 10%. The second thing you said was in terms of perpetual directors. So the answer is that yes, there is a certain amount of time frame which has been given, right, Mr. Monty, for perpetual directors. So a certain time frame has been given, and then you have to go to 5 years from the time of notification of the regulation. So within 5 years, you please go to the shareholders and take fresh approval. In terms of IPO, as you know, when an IPO happens, past share agreements anyway fall off, and they come and they take approval afresh soon after the IPO. The logic for coming again after 5 years is that the shareholder base changes. So just because somebody expressed faith in you 5 years ago doesn't mean that they continue and perpetually have faith in you. You must come here and keep getting a reinforcement of the faith and trust of the shareholder. So that's how that works. AIF, no, it cannot follow the AMFI methodology because, first of all, it's largely equity. So the AIFs are generally holding equity which has become illiquid, whereas the AMFI norms are in respect of debt. So this is really companies where really there's no buyer, you know. So if you can find a buyer, let's take that quote and let's value it at that. And we're just asking for 25% of the number of shares. But if you can't find even that at any distress price, 10 रुपया, 15 रुपया, कुछ तो, कोई तो लेके जाओ. अगर नहीं है तो फिर 1 रुपया ही है.
Okay.
Ma'am, a couple of quick questions.
Yeah, please carry on. Yes.
ठीक है, तब तक मैं पूछ लेता हूँ.
Sorry, just to confirm, I've just been given. Sorry, just to confirm the data on our success ratio in SAT 21-22 is 81%.
Sorry, one question on what you just said. You know, if the quantity is small to just establish pricing, that will be very easy to manipulate.
25%. So 25% of your holding, what the fund is holding. So if the fund is holding 100 shares of that company, you have to establish the price for 25%. And why 25%? Because in order to continue this, not the scheme, but to transfer to the new scheme, you need 75% saying okay. That means 75 are anyway okay to continue. 25% are saying no. So un 25 ko aap exit de de. That's fine. And
just to reiterate, ma'am, this is live bids which could be hit. So if you come out with a fake bid, it's touching.
Yeah, it will get hit.
Yes.
A couple of quick questions, ma'am. First one on the primary market. You know, last board meeting we spoke about how you plan to bring out a new segment where you want to introduce this segment of return if there is any instance where documents are not given to you on time.
It started.
Yes, it started, exactly.
You all are reporting.
Yes. But since then we've seen a drop in the number of issues. a lot of them are being withdrawn, which is much higher as compared to previous year and all of that.